You may have inferred from news reports, internet articles, and several of our movies that Tesla has grown significantly since going public. Currently, Tesla is arguably the greatest stock on the market. Jim Cramer of Mad Money forecasted a sharp increase in the company's shares from the present dollar to 1,800. The stock market is currently waiting for the company to release its 2021 profits report after it achieved incredible results in 2021 and outperformed expectations in terms of deliveries. However, we'll examine at some of the reasons why leading analyst Jim Cramer thinks the stock of the company will reach 1,800 today. How much time would Tesla need to accomplish this? What are the key aspects of the market to watch out for? In today's video, let's find out. Jim Cramer of Mad Money recently shared his thoughts on Tesla's record-breaking delivery report, saying that the company should first and foremost be viewed as a fantastic technology enterprise. Although a lot of analysts think Tesla's value is high, Cramer thinks it will soon seem low. According to Cramer, Tesla will deliver roughly 10 million cars by 2025, and he anticipates that consumers will recognize the company's worth. In spite of a recent enormous run, Cramer thinks Blackstone Incorporated is a great company and that the stock will keep rising on the Mad Money lightning round. When asked about NIO, Cramer said that he preferred Chinese automakers Lucid Group, Tesla, Fisker, and Rivian Automotive. Let's investigate why Cramer believes Tesla stock is so highly valued. When it comes to investing, Jim Cramer reminded his Mad Money audience that you have to put aside your short-term cynicism in order to make long-term money. The C500 increased by more than 27 despite supply chain problems, rising inflation, and the pandemic last year. It's better to be an idiot who gets money than a genius who loses out, according to Cramer. Despite the belief that only fools believe wonderful things may happen. Critics have stated, for instance, that Tesla will never be able to produce automobiles on a large scale or even profitably. Nevertheless, the manufacturer of electric cars declared that it produced and profitably sold close to 1 million cars in the previous year. Although the price of Tesla shares has been rising, many analysts still evaluate the company using a cost per unit figure rather than considering its true value. Although Tesla is by far the most valuable car maker in the world, stock has been one of the most shorted and bet against names on Wall Street for years, making it a key battleground. A number of pessimistic investors think Tesla is much overpriced and divorced from reality. Bulls, on the other hand, think the pioneer of electric vehicles can maintain its dominance over the sector, which is predicted to expand in totality over the coming years. About 2 years ago, Cramer started to become enthusiastic on Tesla and has mostly stuck with that position about the maker of electric vehicles. When Tesla announced in 2022 that it had delivered more cars than anticipated in 2021, the company got off to an incredible start. Notwithstanding disruptions in the supply chain, auto recalls, and other various challenges, Tesla stock performed quite well in 2021. Because of this, Tesla stock has increased by more than 80 over the last 6 months. If the first month of 2022 is any guide, additional gains should be forthcoming. Among investors on the main internet discussion boards, Tesla is one of the most well-liked stocks. So let's examine a few of the factors that make this a wonderful year for the electric vehicle sector. Firstly, the market value of Tesla surpasses $1 trillion. Rather than how many units are supplied, the company's value is determined by the technology it offers with the highest price to earnings. It trades at one of the top 10 most valuable corporations in the world right now. Trends, however, suggest that Tesla's production will eventually match its high price. According to the company, it delivered a record-breaking number of cars in the fourth quarter of 2021. Tuesday saw a further increase in Tesla shares, which were trading comfortably above $1,000 following data from China that revealed record December sales in the biggest auto market in the world. The China Passenger Car Association reports that Tesla sold 70,847 cars manufactured in China in November, more than a third more than the record amount from the previous year. Tesla announced on January 2, 2022, that worldwide deliveries for the 3 months ending in December 2021 climbed by 70 year-over-year to 308,600 units, marking a record for the 6th consecutive quarter and bringing the total for 2021 to 936,172 units. According to Wedbush analyst analyze, China will supply almost 40 of the automaker shipments in 2022. Ives has set a base target price of $1,400 for Tesla shares and a bull case aim of $1,800. The CEO and founder of the company, Elon Musk, predicted last month that the $140,000 luxury vehicle Tesla played, which has a 200 mph top speed, will likely find its way to China in the first part of March. In early Tuesday trading, Tesla shares gained 0.15 to trade at $1059.30, bringing the stock's 6-month gain to almost 56%, while the Nasdaq saw a 0.6 decline. Adam Jonas, an analyst at Morgan Stanley, raised his price estimate for the firm to $1,300 per share, which is a 100 increase from his initial estimate. We believe there is evidence that the industry leader is increasing its lead over its EV counterparts, which should not be interpreted as a positive for the sector as a whole, Jonas said. With its gigafactories in Germany and Texas coming online, Tesla should have no trouble meeting its 2022 delivery target of over 1.5 million vehicles. Elon Musk's influence is a significant factor that cannot be overlooked in a market dominated by highly speculative assets like cryptocurrencies, non-fungible tokens, special purpose acquisition businesses, and disruptive technical advancements. It seems that investors are willing to overlook short-term performance in favor of long-term potential. Tesla. Within SpaceX is one of the richest people on the planet. Elon Musk is the CEO of Tesla, and his voice matters a lot in the markets, for better or ill. His comments about Dogecoin and Bitcoin caused a buying and trading frenzy, and the well-known CEO also has an impact on Tesla. In 2022, Musk is anticipated to reveal the arrival of several new car types, including a cheap Chinese-made electric car, semi-truck, and a roadster. Additionally, he pledged to provide additional details regarding the eagerly anticipated Tesla Cybertruck during the business's upcoming earnings call. Independent research organizations predict that by 2028, this will increase to an incredible $1.3 trillion because of its cutting-edge technology and devoted client base. Tesla is the biggest participant in this market and will inevitably profit from its expansion. But bear in mind that Tesla's rapid expansion may be threatened by fierce rivalry from other significant participants in the electric car market like Lucid and Rivian, as well as from conventional automakers like Ford. Since the start of the company's electric vehicle production in 2019 and the subsequent run-up in the price of its shares at a premium valuation, Tesla has been among the best performing firms on the market. Since creating its first electric car in 2008, Tesla has attracted a lot of attention. It's hard to accept that just over 2 million cars have been produced by the corporation, with about half of those being produced in 2021 alone. It's astonishing that Tesla has a larger market valuation than the whole auto industry, including automakers like Ford. Given that this is a small portion of the 80 million cars produced annually worldwide, electric vehicles are the way of the future, and Tesla is the only well-known brand in the auto industry that isn't hampered by the manufacture of vehicles with internal combustion engines. It also now holds the largest market share in this segment. Thus, even if the stock trails the industry's overall growth, investors in Tesla have every reason to believe that the company will eventually rise to its high valuation. By 2030, the business could easily manufacture and sell millions of electric vehicles. Even while there's an optimistic undercurrent, Tesla is not always an easy brand to own. There are several factors that could cause volatility to rise in the interim, and the company is presently trading at a significant premium to 2030 per share earnings. One of those potential stumbling blocks is high lithium costs. Another is unexpected regulation, as if competition from companies like the aforementioned Ford or GM is really stepping up their electric vehicle game. 8 years is a long time, even though all the news and statistics are excellent. The market for electric cars still has to reach a number of important benchmarks and improvements, especially in the areas of cost and infrastructure capacity for charging, as well as range availability and internal device technology. Not even the battery system has reached its full potential. However, that doesn't lessen the advancement of the manufacturer of electric vehicles. Tesla had a fantastic year in 2021, and 2022 should be much better. It appears that Tesla is going to distance itself even more. How do you feel? Please leave a comment below.